Welcome.
Yeah, nice. Good morning.
Good morning, ladies and gentlemen, and everybody else here. Thank you for coming to the show today. This is the Wise Agent Society's National Real Estate News. I always forget which one we're doing. And today we have distinguished guest Raymond Siddell here in the Cedar Rapids area. He's an excellent realtor, business person, an all-around good person that loves to help people achieve their goals, and that's either consumers, agents, and all the way around. So thank you for coming to the show again, Raymond. A repeat guest.
Yeah, thanks for having me. Excited to be here.
Yeah, good to see you. Some exciting stuff going on today, I think, anyway, with the rates. We just were chit-chatting a little bit about that. And I'm excited to kind of dive in. I haven't done a Cedar Rapids one for a little while. I feel like this last week or two, some stuff is feeling a weird little shifty. You know what I mean?
Yeah, I mean, I think this time of year, in a normal year, like pre-COVID, before things kind of got a little crazy, you know, between Thanksgiving and Christmas, there's always that either you find the clients that are looking to move because they realize their house is too small, or it's too big and they don't want to host anymore. So they decide it's time to downsize. But I think this year has been a little bit different, with interest rates kind of still fluctuating a little bit, and the talk of interest rates continuing to decline into the first quarter of 2024.
Yep. It's we've been experiencing some kind of never seen before market conditions. So all of this is we're just doing the best we can with the data we have as it comes up, eh? Yeah.
We're learning a lot, just as the consumer is, on a ever-changing basis. That's one way that we can absolutely relate.
Yeah, totally. Well, cool. Let's so normally the same format kind of applies to what we did last time. We're just going to talk a little bit about how we know each other. We're going to talk a little bit about, we can do a quicker rendition of how you got into the business, and then we'll get into some market data and what's happening in the Cedar Rapids area.
Yeah,
so
that sounds good.
You and I have met through, actually we met at the Habitat for Humanity bags tournament this last summer, and just chit chat a little bit, and then we've become friends and have talked on and off from there. And you are the chair for the which committee is it? The
scholarship committee.
Scholarship. I couldn't think of the word. Scholarship committee for the Cedar Rapids Association of Realtors.
Yep.
And so then you've also put on events for that, and you have an excellent crew on that committee as well. Maybe if you want to just give a quick shout out on what you do for that committee again, and then maybe even just tell us a little bit about your journey into real estate.
Sure. So the scholarship committee, we are one of the larger scholarship award entities, I guess, out there in our area. And last year we did 68 $500 scholarships for a total of $34,000 going to local graduating seniors and those that are already attending an Iowa college or accredited secondary education. Could be a trade school or something of that sort as well. And so our committee sets out every year to continue to increase the number of awards that we are giving out in our community, as well as create a lot of fun while we're raising those funds through our Realtor Olympics, bowling, guest bartending, and then we do 50-50 at a monthly breakfast as well. So that's a passion of mine. I've been on that committee since 2014, about a year into my career here as a real estate agent, and have really enjoyed that. Which leads me right into, I got into the business in 2013, coming out of retail management, and deciding that what I thought was going to be freedom of schedule, and a little bit more flexibility was exactly what I was looking for. And quickly you learn that this is a business that requires a lot of discipline and showing up, and high expectations of you as a real estate agent amongst your peers. The multiple people that you'll work with in a transaction as well as your clients. So very quickly, I learned that I loved assisting families, individuals, multi-generational households in finding whatever it was that they were looking for in that next step of their lives, whether that was downsizing, increasing the size of their home, or sometimes moving into a rental situation or buying their first home. So I've really enjoyed that experience, and have been grateful for all the clients that have trusted me to assist them. And, it's made me a better person to learn the different ways that people get into a home and what it means to them. So,
yeah, I love that. And so along with that, there is a lot of personal development on our side, learning how to deal with different kinds of people and to best help people move forward. And we're always learning. And that's for me, and I'm sure for you too, that I love the challenge of figuring out the new situations and problem solving and finding more ways for my clients and or agents to win,
Yeah, absolutely. And every transaction is a little bit different. So it's not going into the same workday every single day. And every situation, every person, every individual that you come across, they have a different story, and helping them get to their ultimate goal is a very rewarding experience for me as a real estate agent. But I think that as a whole, as an industry, we should be proud of what we do and how we get there.
Agreed. It's never boring. And I mean, if you're bored, you're doing something wrong, because every single transaction seems like, well, I mean, not every, but a large majority. And you and I have both been doing this for a while, and we've seen a lot of things, but there's still things that come up that we're learning, and we're like, wow, didn't come across that before.
Absolutely. Yep. Like a pandemic. How do you show houses during a pandemic? Or how do you educate without, and help remove some of that fear when we talk about interest rate hikes, or, tightening of mortgage lending requirements, or we're starting to loosen things up a little bit. That can be just as scary as tightening things. So, over a 10-year period that I've experienced, it's an ever-changing industry, and the experience is ever-changing. But also, I think that's what keeps us relevant and important in each and every one of these transactions that we participate in, and protects the consumer at the end of the day, to ensure that a good agent that's on top of what the market's doing and what the local, state, and federal laws are doing, and how we can best help them, is what we bring to the table. And will continue to challenge us as agents to be the best that we can be.
Yep. And that's why it's important, and why for us to continue with our continuing education and constantly learn about the market trends, which we're going to do a little bit today, to keep that's what helps keep us relevant and being the neighborhood or area experts in what we're doing, so that we can help people. And the conversations always change, right? So our conversations, not only do they evolve, but they also just change because the conditions are different. So the way we talk about things and the way we look at things continue to evolve.
Yeah, absolutely. Your agent might tell you one day that it's a great time to sell in this price range, or it's a seller's market, or it's a buyer's market. And, the next week they might be using different language, or it might switch from a buyer's market to a seller's market. And that's them being knowledgeable and paying attention to what's going on, and preparing you as a consumer to make good decisions when the time is right. Yes,
sir. That is right. Real quickly, I'm just doing a background. I don't have my background person right now, so I'm going to see if I can fix part of our live stream real quick. Yours might be going, and it's going on a couple of mine, but not all of them. So I was just going to see if I can't fix one real quick. And if not, it's not a big deal. I'm not seeing it, so no problem. Cool. So, right. So I think that's a pretty good transition into, things change, things are changing. Do you want to talk a little bit about what we were talking about earlier today, or I can bring up the rate stuff? I even have actually the sheet from Holly Randall. Maybe I can pull that up and we can look at rates real quick.
Yeah, I think that's great. And I have to dovetail into that, I have a chart as well of the average 30-year mortgage rates. over time. So I think that, and that'll tie into kind of what the market has done over the last few years and why it's changed and why we've seen so many different things going on in different rhetoric around real estate.
Yeah, fantastic. That's perfect. So here's the sheet. I'm going to make this bigger for me of the rates that I just got today from Miss Holly Randall. So if anybody needs some help at Hills Bank in the Cedar Rapids and greater Iowa area, or are they just Eastern Iowa? Maybe they're just Eastern Iowa.
Yeah, they have I don't know how big their county reach is, but yep, they have a specific county and reach in the Eastern Iowa area.
Yeah. Well, here's the fan-diddly-tastic part is we're seeing stuff in the 5s. That's incredible.
Yeah, this is exactly what we've been talking about, right? When rates continue to jump this year in 2023, and they talked about quarterly rate hikes, and then we all went, well, these are faster than quarterly. It was like the first 2 quarters we thought we felt them every week. It probably wasn't that frequent, but a lot of changes, and so the Feds have talked about the inflation coming down to that 3%, which is not quite where they want it. They want it closer to 2%, but they've done a good job with the rates, and consumers have started to realize that we need to slow our spending in other areas and brought that inflation down a little bit, which will now allow the Feds to focus on bringing down the federal note, which impacts mortgage and car loan rates and other rates out there in all the different aspects of our life, right? So to see a 5 to start off an interest rate in our area is amazing. And I think that, to be completely honest, as a real estate agent, you might have heard, marry the house, date the rate, you can refinance. So for those that have a 7%, definitely keep an eye on these rates as they continue to decrease. That's what the expectation is. We can't guarantee that. That's the prediction. But also, we've talked to the buyer pool that, if you're waiting for those interest rates to come down, so is everybody else. So there's going to be more buyers in the market as these interest rates continue to come down. And we anticipate a competitive situation again amongst good, well-priced and good condition homes. So something that we need to be keeping an eye on.
Yeah. Inventory levels are still low. I mean, they're low everywhere. And so all of this is going to do is increase competition, and when there's more competition, still low inventory, that's going to drive prices up. That's just the way it works. So right now is a good time before the masses kind of catch wind and get all crazy. Now, but this is a trend for now. The trend could change. So like you said, it's a good idea to watch this and see if you can jump on it. We just locked one on ours, and we did a 2-1 buy down, and we locked it at 699. So our first year was 499, and then 599. So, but I mean, we're a point under that. So I'm like kicking myself. And that was like 2 weeks ago or so that we locked that, 2 or 3 weeks, whatever it was. It was a quick close.
Yeah.
But anyway, that's just, now we're looking at refining already. We just closed on us, and we're already looking at refi.
I think we'll see refis go back up. I think, we won't see an inventory increase, in my opinion, just because we have so many mortgage holders that have below a 5%, right? They bought in, they refied, whatever it looked like for them in 2020, 2021. They're below 5. Some of them are below 4, and so it's really going to take a big market shift or something in their favor for their inventory to hit the market for sellers to decide, or current homeowners to decide to become a seller, and get a mortgage rate in the 5s. That's going to be something that we're going to have to be mindful of, that inventory is not expected to increase at some astronomical level that we haven't seen in years past, regardless of what interest rates do.
Yeah, I mean, the builders are so far behind, nationally. There's no way they could catch up. It will just continue the inventory squeeze will continue to, in my opinion, just get worse, really, because they can't catch up. They won't catch up because they're afraid to build the spec homes and have a bunch sitting there and then get stuck with them again.
Right. Well, and they're bound by interest rates. They're bound by holding costs. They're bound by the ever raising insurance rates that we are all experiencing. And so there's a lot of factors that play into, even a builder deciding to build a spec home or start a new development can be challenging. But to even talk about new construction outpacing existing home sales or trying to catch up, that's in the 10 years that I've been in the business, that's never been part of the conversation.
Right.
That we're banking on new construction to just flourish to,
solve the problem.
Yeah, to make up some of the deficit in the inventory.
It'd be great if they would, but
well, and new construction, is unattainable for so many people just at the cost of a new construction home right now. So those are things that we're going to have to keep in mind for our first-time home buyers and our second home buyers as well.
Yep. Real quick here, I just noticed too that these come with points. So I didn't see that at first. On the top here is our I don't know how to do a pointer right now, but anyway, the top section of interest rates and such are coming with points, it looks like. So those have a bit of a buy down in there or a cost to get those. Oh my gosh. And then, but I do know, and I've seen even on Hills Bank, I think without points, a little bit higher, maybe 6. It was still under 6.25. And then other banks, one of them being DePaco, has 6.25 no points. So still, and it depends on the price too. So, as they get lower or higher, it shifts, but still great, amazing rates. But I did want to just put in there that there's some buy down there, or there's some costs to get those rates.
Right.
Cool. Did you want to move into checking out your that's what we
can talk about market stats, and I apologize, I don't know how to share multiple, so we'll have to work through sharing different images here. But if I could, I'm actually going to.
I think you might just be.
Did that go away? Oh,
it did go away, but I can add it back whenever.
I'd like to share a different one if I could, but I'm not sure.
You might be able to just present and go to screen share and pick the window or whatever option, or tab maybe.
Yeah, my option is to stop or select slides, which I don't have. So
is there one below that, like below the slides and whatnot?
It's video file.
You don't have a share screen below that?
I do, but I've already shared that. So let's take a look here and see.
Bear with us, folks.
That's all right. This is a new platform for me, especially, and I think maybe you as well, a little bit newer than for the last time that we were on here. So
it's newer for me, yeah. And then I don't usually do my own production, so that's why we're really struggling here.
That's okay. So I just threw another one in there, and this just dovetails into what we were talking about with rates.
Yeah.
And we're never going to go back to I shouldn't say never, because the world's a crazy place. 1970s, 1980s, when interest rates were above 10%. And, people talk about, well, I wasn't alive, or my parents, didn't buy a house. They had to have 20% down. And I think that those are things that we need to be talking about when we're looking back at the 70s, 80s and what interest rates were like.
Yeah.
What's that?
I like this slide. Yeah.
I think that if we talk about it, although it's historical data, we know that's most things are cyclical, right? They come back around in some way, shape, or form, whether it's because we did something that caused an issue before and we didn't learn from the first time, or things out of our control. So I think the general trend here, obviously, is that interest rates are fairly good compared to what we were seeing in the 70s and 80s. But even when we had our little spike this year in 23, it's still below where we were in the early 90s and somewhat in the early 2000s as well, right? So something that we need to be mindful of is that although it felt uncomfortable in the moment, it was for a reason, according to the federal government, but also, looking at it from a holistic standpoint, we're still at a very low interest rate over the last 40 plus years, right? And hopefully we can just adjust. That's what we're going to need to do here is adjust. And obviously, looking at trends, this is one of the biggest jumps that I've seen in my lifetime. Hence why we're uncomfortable, right? Anything that changes quickly creates a little bit of discomfort, and it shook up the real estate market a little bit, slowed things down. But I think this downward trend that we're going to see, hopefully this next year, will correct a lot of that discomfort and put us back on track to where we all hope to be.
Yeah, and I'll give a little perspective here is, so this property that we just bought, this small animal farm thing, we were in contract on it, 4, 5, 6 months ago, and then we canceled because of lots of different reasons. But then this is what I'm thinking. People aren't thinking this way, and Warren Buffett puts it, the best way, that buy when people are fearful and sell when people are confident. So I got that into my head here about, well, the interest rates are so high right now, but they're going to change at some point. And I just started seeing that opportunity be so much, and I'm already capitalizing on it because the rates have come down so far, and just if they continue to drop, and depending on how much and how long they drop, I mean, all of that just adds to the opportunity of this property that I bought.
Right.
So there, I realized this opportunity. I mean, I kind of knew it before, and there's a ton of equity in opportunity in this too, and remodel type stuff. But this rate thing is what really got me cooking on it, besides my wife wanted the property. But I just realized, it kind of hit me how that, once these rates do come back down, that's just going to make the property appreciate so much more. So that's just a way to think about it. So other people are like, oh, I don't want to buy right now, it's a terrible time. Well, like I said, we can already refi a point down, and we just bought it this week. I mean, we just closed this week. So just some perspective there.
Yeah. People. And I think, when I was looking at stats and preparing for this, when we were looking at, the historical price trends, prices aren't typically going down, right? So other than the crazy time when we saw some craziness going on. And right. So anybody that's talking about, interest rates or, waiting, the cost of waiting is just it's so expensive to wait because the appreciation that we're going to see, which is why people buy into a home, right? They want that stability. They want to build that wealth through home ownership. The expectation is that continues to appreciate. And so if we're waiting for interest rates to come down or more inventory or prices to come down, at the end of the day, when you choose to make that purchase, I think it's just going to be more expensive than what you anticipated for a variety of reasons and things out of our control. But it is the natural appreciation of real estate. And as new construction we've talked about is more expensive now than years past, and the cost to build is higher, that will continue to push that median price upwards. And
we lost him. Kicked off.
I think I lost you there.
Kicked off.
Yep. You're back. Unfortunately, when we're waiting and we're talking about this new construction, it's just going to push people into a place where they're not able to buy, and they're going to be even more uncomfortable. Right.
So the saying is, the best time to buy real estate was 10 years ago.
Yep.
What's the second best time?
Right now.
Right now. That's right.
And that's when people ask me, it's now a good time to buy or sell. They teach you oh, you're supposed to say, well, what market are you in? Well, to be completely honest, as great as that question is to start a conversation, the reality of the situation is now, right? Because we know what's happening in the real estate industry right now. We know what's happening in the market, their interest rates. We can't predict, as much as we want to be wizards and say that your house is going to be worth X later, or that interest rates are going to come down. That's just not something that we have the ability, and we should not be doing as agents. We should not be trying to do those things. So I think that keeping an eye on the market and these interest rates as they continue to trend down is going to be key for so many people, whether they're looking to refi or make that purchase.
Yep. And then it's case by case. So we're not just saying everybody should go buy right now. That's for everyone. It's definitely case by case. So that's why it's important to talk to Raymond, talk to me, talk to your trusted real estate agent, and go through and you'll get hooked up with the mortgage person, an LO, a loan officer, and go through your personal situation, see what makes sense. Does it make sense? Like, but I'll tell you one thing. This is the funniest thing when people are like, I'm not going to buy a house because it's 7% interest rates. And I'm like, well, the rent you're paying is 100%. So you can afford that? Tricky. Yeah. So keep that in mind when and another thing is when you're paying rent, you're paying mortgage anyway. This is not your own. You're paying somebody else's mortgage. And it could be from 10 years ago. So now, you're basically paying off somebody else's house. So get with us, talk to your trusted professional, and it might not be right now. It could be that we put together a plan for you to in 6 months or a year, fix up your credit, have a plan to save money, do whatever it takes to kind of get into that position to be building that long time generational, possibly wealth, right?
Yep. And I think talking to your lender too, if you like the idea of the interest rates coming down and that's something that you've been waiting for, and we're starting to see that trend, get in with your lender now, get pre-approved if pre-approval is an option for you. That way, if a house comes on the market that you are interested in, you can move quickly and you can be competitive. Having your assets, your income, your employment, all of that verified by your lender up front and have that written into your pre-approval letter, help your odds when you're competing. And I think that's what we need to prepare for is competition, escalation clauses, and just very competitive offers when it comes to the purchase price. So getting into with your lender is going to be huge to know what your buying power is. And we're going to go back to looking potentially below your max dollar amount, knowing that that's probably where we're going to end up because we're writing over list price as more buyers come into the marketplace. Looking at your max and then trying to write over. One, doesn't feel good for your real estate agent because they are looking out for your best interest. But two, could put you into a tough position. So just knowing that buying power right now is huge.
Yeah, that's a great point. And I have an exact example of that. I have she happens to be a newer agent, but I have a new agent to my team and organization in Northwest Iowa. And she has a client a house just dropped $50,000. It was a crazy drop. And the value's there. It's severely undervalued now. And there is some competition. So first of all, there's a lot of competition. Second of all, they had to write over list price, obviously, at this point. And they, I think, even are waiving their inspection. And so I'm just saying, I'm seeing that right now. And they had a pre-approval, and I don't know why this worked out exactly what it was, but it was a little under the purchase price. And so my agent called the lender. We didn't set him up with the lender, I don't think. But anyway, either way, and said, hey, this is where we're at. Is there something that's possible for them? And they're like, yeah, we can actually bump it $10,000. So, or whatever it was. So we're in. So as far as I know, we're hearing back today, but it's getting into that situation again. So like you said, talk to your person, be prepared to do all of those things. And we were talking escalation clause. We decided not to in this particular moment,
Sure.
Which for those people out there that don't know what escalation clauses is, that's when you say that your client will say that they're going to pay X amount of dollars over the highest offer that they've received. And the way I structure it is that we put a cap on that too, so it's not just forever. And I also say that we want a verifiable other offer, so we'll pay $1,000 over any verifiable offer up to $10,000, something like that. So
we have a form in our market that in the Sierra Rapids market, and it's very specific that it's there's a cap on there, how much we're going up to, what that dollar amount over is. And then it also does it binds the seller to providing a redacted version of that highest offer so that you can see that there was another bona fide offer, an offer that would have come together showing that purchase price and that it was a competitive offer at the time that you were competing. So I actually just had one of those on a listing of mine. I just saw an escalation clause, which I had to stop for a second because I haven't seen them for a little over a year and a half. And I was like, okay, we got to go back and look at this again and make sure that, we're all above bar with what we're doing, because it does get a little dicey with an escalation clause. But it all worked out, and in my seller's favor, of course. But it's one of those things that I think we're going to continue to see. And so agents that are listening to this or that might see this later, brush up on your escalation clause, whatever that looks like, whether you have one or you need to go find a document to make sure your buyers are prepared, or that as a listing agent, you know how to talk to your sellers about it. That's huge.
Yep, 100%. That's a great tip. And that's awesome. I didn't know that there's an actual form here that is, I am constantly impressed with the association here, with how organized and professional they are in all the ways that I've seen so far, compared to some other parts of maybe the state and or whatever. It just seems like this side of the state has it really put together, and has a strong, ethical, setup. So that's awesome. I really like that form.
Yeah, it's there's a form for everything in real estate. So as buyers and sellers will learn, every time you buy or sell, there's more paperwork. There's more to sign. There's more to agree to. A lot of that's because of market trends or conditions or, legal aspects of it that we've determined or learned that need to be addressed in different ways or made more clear. But having those forms and having an agent that's well educated on those forms really helps to know that the consumer is protected, which is who we are looking out for, is that consumer. So,
yeah, that's great. Cool. So how about, do you have data on average market price, days?
Yep, I loaded that one into the thing there.
That what's in there now?
Yep. So that's the median sales price year over year, going back to 2013. And I think, we were talking about just in general, like the cost of waiting. And, here we're looking at a 10-year period, right? So in 10 years, we're at $60,000 of a median price increase. And this is the Cedar Rapids metro area. So Cedar Rapids, Hiawatha Robins, Marion, and then all 4 quadrants of Cedar Rapids are included in this.
And this is the average, but I do know that I just happen to know in Fairfax, the number is more around 400,000. And I'm sure maybe Robbins is probably the same.
Yeah. So Hiawatha Robins, Marion, Fairfax, you're going to have a little bit higher median price or average price. The other thing to keep in mind too, some of those communities, especially Fairfax, for example, there's a lot of new construction focus. And so when you're new construction on average is, 380 plus, and then you add any sort of square feet in the lower level, you're going to quickly increase that median price. And there's not a lot of turnover in those existing homes in some of those areas because one, that's where people want to live and they're staying there for a longer period of time. But two, some of them were slow to add growth, and have only seen growth in the last 20 years with new construction, adding new developments. And now they're capitalizing on the ability to continue to grow outwardly and add more new construction developments. So you will see a higher price in some of the quote unquote suburbs, which is weird for Cedar Rapidians to say. But that's what they are. There are suburbs. But overall across the Cedar Rapids metro, that's what this number, that's what I wanted to, I'm glad you brought that up because I wanted to clarify this is the Cedar Rapids metro, bringing in all those communities.
Yeah. For people across the country, they might be looking at this like, what? Both of them are fairly reasonable prices, even if you're talking 400 for an area compared to West Coast, East Coast, different spots. Even Texas is, and all that stuff is on fire. You're not going to find stuff like this in Texas.
Yeah. So move to Iowa, move to Cedar Rapids. Very affordable. We have affordable real estate, even when interest rates are high, right? Competitive markets. We still maintain an affordable place to live and cost of living. But, when I got in the business, the average price point in our MLS, so not which would expand a little bit beyond Cedar Rapids, was in that 180 80-ish range. And when I would travel and talk to other agents from other markets about our average, they'd be like, what? You can't even buy a house for that much. Like that's not even, you can't even buy an empty lot for that much, And so it's crazy to think that we are so much different than other parts of the country. But I think that this graph here just goes to show that even in our area, and if I were to include the entire MLS, we're not going to see this weird curve, right? It's just going to elevate all of the entire line is going to move up, right? All of those data points are going to be elevated, given the other areas that are not included in this. But I think it just goes to show that the cost of waiting, you can see that this is a good visual, that if you wait even 2020 to now, you're potentially 30,000 more, right? Like that would price a lot of people out of the market. Yeah. And so that's one thing to keep in mind as we see these interest rates go down.
Yeah. And that's the average price. So then when you're talking, so like the house that I bought here in Fairfax was $389 when I bought it. Now I put work into it and whatever, but I mean, we'll sell it for $475, right? Like all day. But I mean, we put in another bedroom, we did some stuff, but either way, we're still going to net a huge chunk in a year.
Yeah. And that is, that is your, when you're talking about that being the average, you're also competing with a lot of new construction in that sense, right? Because that's what's hitting the market is our new construction. Yeah. That's what we're paying
in a way. Like as a buyer, I would say for the resale.
Oh, 100%.
It's such a good deal. And,
I have a listing right now that, our biggest competition is new construction, but you don't have to wait. You don't have to wait for it to be built. You're not waiting 6 to 9 months.
The backyard's done. Well, depending on.
Yeah, and the cost, right? Because right now, as you get into some of these new constructions and you make modifications to your finishes or what have you, or something's backordered and you have to change direction, you might be spending more to get something faster, or you might change your mind on something and now the cost has gone up. And so there is definitely a benefit to buying existing when you're considering existing to that new construction piece.
Yep. Totes my goats. Do you have a, did we talk about days on market? Do you have a days on market? Can you find a days on market?
So days on market. And again,
do you want me to take this one off?
You can, but I apologize. It will not let me replace whatever I have there. So
I can kick it from the studio.
Let's try that and see if it'll let me add something.
Oh no, that's going to kick you. I could kick you and you come back.
Well, let's just do this.
It's gone now.
We'll go this route. So this graph, this is not going to be overly exciting, to be completely honest. Cool. Average days on market, when we're looking at this year over year, you're going to see that pandemic year, right? Like when things were just flying off the shelf, interest rates were really low. Our median days on market plummeted. We were 2019 about 17, and
they were sound like hotcakes.
Yeah, we saw it drastically drop. But I think what we can focus on though is, although we've had less sales this year compared to 22 and then even 22 to 21, our days on market didn't dramatically increase, which really plays into what we were talking about earlier with that lower inventory. And there's still buyers on the market. Even through these 6 and 7% interest rates, buyers have still purchased real estate. In October, we were about $10,000 behind 2019 numbers in the Cedar Rapids area MLS. So when we're looking at overall sales, our volume was not totally different because the price of a home has gone up. Our units were down, our number of sales or sides, however you want to look at it. But because that inventory did not drastically increase once interest rates went up or people felt comfortable out of the pandemic, we didn't see a huge increase in days on market. We're still pretty low. And again, this is a snapshot of just the Cedar Rapids metro. And it's just residential property. And
to clarify, and let you tell me, because I don't know what this graph is exactly showing. Is this showing from when it hits the market till when it goes into contract?
So we count in Cedar Rapids, yeah. So under contract, yep. So it's
sold, but it is days on market till it goes into contract.
Under contract, yep. So that means on average right now 1 week on the market, right? That's what we're seeing.
That's awesome. I mean, that's exciting to me. I like that you know, that it's going fast. I feel like that's good for everybody because sellers don't have to sit and be like, what's happening with my house? And is it broken or whatever? And then buyers still can buy them. You go buy them, like, you know, so I like that better than when it's really long and drug out.
Right. And I think it shows that we're not in a market where buyers aren't buying, right? Otherwise, there would be a lot of inventory and things would be sitting for a long period of time. And that's just not the case, even with higher interest rates. So, again, I don't know that I can hammer this enough, but we're probably going to see a little bit of a downward trend on this median days on market from list to under contract as we see more buyers come into the market with lower interest rates.
Yeah, we'll see how this winter goes. And but I mean, a couple things. So I'm guessing and I'm feeling that when spring hits, it's going to be bananas for two reasons. First of all, I just feel it with the trends that are happening. I will have to watch it through the winter. But then secondly, we're going into an election year and they like things to look good during election years. When I say they, I mean the powers to be that control, you know, interest rates, all the stuff. And you know, everybody wants everything to look good. Federal government. Yeah. They're going
call it what it is.
They're going to make it look good. They're not going typically. I mean, that happens every election year. Nothing big or crazy is going to happen during that time or negative. They're not going to change things in a negative way to impact anything. Everything looks pretty sweet during election years. That's another thing that was like compelling me to. So I feel like this coming spring is going to be bananas.
I think honestly, we'll start to see with interest rates going down. I think we'll start to see a little bit more inventory coming on the market earlier than normal. I think we'll see a little bit of the sellers who want to get ahead of this and not compete with sellers who they're waiting for the school year to end. They're waiting to get through the holidays. I honestly think we'll see sellers who were going to sell regardless of the interest rates, right? They want to cash out that equity or for whatever reason, they're making a move. I anticipate we'll start to see some of that a little bit sooner to capitalize on these known interest rates. Again, we discussed, we know what the market is doing right now. So right now is the best time to buy. Those sellers are going to list, get buyers under contract so they can lock in those interest rates before there's an unknown if something were to change the opposite direction.
Yeah, if it starts trending the other way. Right now is a great opportunity. I'm not kidding you. I get excited when we can see data that makes sense and when there's opportunity. So I'm a big opportunity guy. So when we've bought and sold so many houses, it's crazy. And you don't have to take advantage of somebody. You don't have to go out and maliciously do that, or you know what I mean, or try to take advantage of somebody that's in a bad way. There's stuff out there. There's opportunities to have for a lot of different reasons, and it's on the market. So I bought one house off market, but all my other houses I've ever bought, which I profit on all of them, I buy on the market. And for whatever reason, people don't see the opportunity, and I get it.
Yeah. Well, and I think the other thing that we need to keep in mind is for anybody who does buy now and they're a little bit more comfortable in that 5.75 or whatever they end up with over the next couple of weeks or couple of months, if we're on a downward trend, that means refinancing is in your future. So you need to be looking and watching. If you've never really watched the interest rates before and you're like, I've just kind of let people tell me or let it come across the screen or what have you, Facebook news, now is the time to really keep an eye on that if you do buy, because you're going to be able to see, you're going to be able to watch those interest rates as they continue to go down if that's the trend that we're on. And that will keep you well informed as a consumer and a homeowner to then go and refinance when the time is right for you. There's a little bit of cost to refinancing typically, so keep that in mind. But it's something that I think lenders are going to be having a heyday between refinances from the people that have bought while interest rates were 6 and 7, and we're going to have another refinance boom as interest rates continue to trend down, in my opinion. So
it's already happening. My wife just, she's in the mortgage industry. She just sent me an article about the top 3 mortgage originators or whatever, big companies like Truist is one of them. I can't remember all of them. That just one popped out in my head. But also, I saw a blip of an article somewhere that refinances are spiking. There's an uptick in refinance. People are already doing it.
Sure.
Because we were in the mid sevens to even high sevens, maybe even creeping in the eights there, 2 months ago? Maybe a little more. So, I mean, like, it's happening. Like, we don't know if it's going to continue happening, but I mean, the stuff is looking good right now for different opportunities. So
yeah, it's what buyers or consumers have been waiting for, right? They've been waiting for the interest rates to come down. This has been part of the rhetoric for so long. And when I say so long, because it feels like forever, these interest rates have been over 5%, over 6%. But that's what buyers have been waiting for, interest rates to come down. Mm-hmm. The other part of that is for the price of a home to come down. I just would not bank on that as a consumer. I would not.
Nope.
If it were to happen, it would have happened at the height of the interest rates. That's when people would have decided that I need to wholesale my house. I need to move, and I need to drop the price dramatically to make that happen. That's just not going to be the market that I don't anticipate that we'll see. Again, I'm not predicting the market, but just with basic economics, but also the trends that we've seen over the last even 5 years. That's been a huge part of it.
Yep, totally agree. I'm really just excited for this spring and this summer because, I mean, activity shrinks a little bit during the winter time typically. And, that's the fourth quarter. It just happens. Doesn't mean that it's not a good time to sell because it is. You have less inventory, less competition, higher, like less tire kickers. So higher motivated people that are going to buy or sell in that time. So your list to sell ratio is always going to be better in the fourth quarter than it is in the second quarter, which is typically the most activity that you'll see in a market. But you're going to have a lot more competition if you're a seller because there's going to be everybody sells in the spring and the summer, right? And that's also the same for buyers and stuff. So you're going to have some that are going to buy and some that are they're going to tire kick and whatever. So the list to sell ratio is actually lower in the second quarter, but there is still a lot more activity in that, first and second quarter, the second quarter especially. And so I'm excited about it. I think it's lining up to be a good opportunity for both sides. So if you need to sell, I think you sell quickly. If you need to buy, interest rates are coming down. That all is more affordable. So right now is a good time, but do it now. I'd say pull the trigger if you're thinking about it. Right now, it's a great time to do it.
To buy, yeah. I just threw another graph in there, another chart in there, if you want to throw that up. But this is what you were talking about. So active listings. So the different colors are the different years back to 2018. And you'll notice in our, 21 and our 22, we started off with low inventory and it didn't really ever just have some big spike. But you'll also notice in the second quarter, which you were just talking about, we start to see more inventory come on the market, more competition.
Every time.
Every time. I mean, this is a fail safe, right? We kind of know that this is the same trend that we're going to see year over year is inventory starts to decrease at the end of the fourth quarter and starts out low and increases definitely well into the second quarter. We will see that again, but we may have even less listings to choose from if people don't capitalize on these lower interest rates and cashing out their equity to move. And that's what we really need to see. We really need to see some sellers who decide the interest rates are where I need them to be to make this next move in order to bring some of that existing inventory back into the market. Yeah.
And you've said it multiple times and we all say it, good agents, I think, say it is we can't predict the future, but in the grand scheme of things, things are trending down. Now is a good time, I would say, to buy because you can still, if it continues to trend down, you can still refi again and get even better deal, but you might still have a little bit of potential bargaining chips on the purchase price. All that's shifting rapidly right now, though, and so good time to possibly get in while things are trending down because we don't know when the bottom is going to be. We don't really know when the top's ever going to be. We don't know when the bottom, but we can see when stuff's shifting in a way that it's like, okay, this is probably a fairly probable good time to act.
Yeah.
So,
well, I think looking back at that 30-year or the 30-year rate over, the 40 years roughly, I think one thing that we can hope for is that rates settle somewhere in the fives, right?
Mm-hmm.
If we can get them into the upper fours or lower fives, somewhere in there, right around that 5%, I think that's going to be the feel good spot for a lot of consumers and a lot of buyers, and hopefully start to level things out in some capacity. But if inventory continues to be an issue, that those interest rates will help people feel better, but that's not going to help the inventory side of things.
Yeah,
so like you talk about, we don't know the bottom. Do we think we're ever going to get to a 3%? I mean, probably not, right? That hasn't been the trend other than in a pandemic, and hopefully we don't have to go through that again. So to get to a 5% or right around there, I think would be ideal.
Yeah, I think so too. I think that's an appropriate kind of level to be at. The threes and the twos was a little bit too much. They're trying to, the Fed was trying to, or whoever is the government is trying to incentivize people to purchase housing and that stuff to stimulate the economy. And now they're trying to cool the economy. So it's a balance, right?
Yeah.
So, this is all great stuff. What do you think would be a good maybe way? We've reached pretty much the end of our show here. What would be a good way to leave people with as a good wrap up over what we've talked about right now in the Cedar Rapids area?
Yeah, I think just if you don't have an agent that you trust, that you like, that is regularly in contact and sharing this information with you, find one. If your agent is somebody that you know, like, and trust, reach out to them, see what they're seeing, or ask them what they're seeing, find out what their take on the market is. And even if you're not looking to buy or sell right now, it's good for you to know this information as things continue to change, and maybe your situation will change. The more you know, the better prepared you'll be. If you are looking to buy or sell, especially if you're looking to buy in the near future, get with your lender, get with somebody who can talk through your options, what the products are available to you, what the interest rates look like. And then overall, if you go to them and they say, hey, you're not quite there, what does that look like? So that you're either ready to compete or you're getting ready for when the time is right for you. Those are going to be huge. Sellers are going to be looking for pre-approved buyers who have their assets have been approved or have been verified. They're going to be looking at pre-approvals that show that income has been verified. And so having all of that kind of ready to go and your ducks in a row are going to make you a better buyer on that in that competitive market that we're expecting, even if that competitiveness is not the top dollar. There are things that sellers look at and agents advise their sellers of that don't always just come down to that bottom line. It's not, okay, you can get another $1,000 out of this person, but this person is ready to go. Everything's been verified. That $1,000 might be better left on the table and go with somebody that's done their due diligence and their lender has them ready to purchase. So from an agent's perspective, just be ready for this market on the lending side and just stay in the know, watch the trends. Don't listen to the scary news. The media does a great job of instilling fear in us in so many ways because they want to control what we believe, what we think, and how we behave. But you have friends and family that are either buyers, sellers, or agents that would love to share their experience with you, their knowledge, and help you be the most prepared for the market. I'm not going to try to predict what the interest rates will be next year because we've talked about that enough. We don't do that and we shouldn't be doing that. But I think this, seeing the interest rates that we saw today, I think is a good indicator of where we're headed. And I'm excited. I'm excited for buyers and sellers to feel like they have an opportunity again and not wait on something to change that we have no control over or no idea when it's going to happen. We're starting to see the proof that it's happening. So,
yeah, no, great summary there. Get pre-approved. Well, talk to your realtor, get pre-approved, start paying attention to what's going on. get excited. That's what I heard there.
Yeah.
And I will be
Excited.
one to vouch for Raymond as being a top-notch professional and all-around great person that is going to advocate for you and help you figure out your situation. So if you're looking to buy or sell a house, or just want to have a consultation with Raymond, you can connect with him. His information's at the bottom of the screen here. And he's happy to help you go through things. I'm always here for your help. Everybody knows that. Call me with any questions. I can connect you with, and so can Raymond. We can connect you with agents all over the country, not just here, but both of us have connections all over the country where we can plug you in with a trusted professional that will help you. And then you get our guidance as well.
Yeah.
So, yep. Thank you all very much for coming to the show today. Look forward to seeing everybody on Tuesday next week, same time, 11 a.m. Central Time, while we talk about, I don't know, it's called Sharpen the Saw. So we talk about a skill or something that's good for people to learn. And I hope you all have a great weekend. Talk to you soon.
Thanks everyone. Thanks, Shay. Appreciate it.
You bet.